Hello traders, the title of the video is how to polish Elliott wave forecast like a pro. So you have learned the Elliott wave theory, the Elliott wave principle, you understood it, alright? Now you are applying it, but it's not working as you were expecting it. Now you are looking to polish your Elliott wave forecast. Today, we will be talking about how to polish Elliott wave forecasts like a pro. The first thing that one should do, one should separate the theory of the reality of the market, right? The second thing one should do is when one is forecasting the market using the Elliott wave theory, one should always use a different forecast. So you see it one way, you say, all right, this is what I've seen, this is what is likely to take place using the Elliott wave principle. Now you want to look at it from the viewpoint of other traders, or you want to see it how other traders may see it. All right. So I'm going to do a practical demonstration today, and we will be analyzing Symantec Corporation, EPIC SYMC, Sierra Yankee Mike Charlie. This is an American stock that belongs to the technology sector. Alright, so I've been counting waves on a monthly chart, which I always do. Alright, so suppose you were here. Alright, so I'm going to hide some of the part of the thing, and you start counting waves here. So you say this is the first wave, as I did here, a second wave, a kind of a zigzag here, 1, 2, 3, followed by the third wave, which is prolonged all the way up here. So you on a monthly chart, you see that. You say, all right, this is the third wave right there. I'm going to color it now into orange. Nothing wrong so far, no violation of Elliott wave principle. And now you see the fourth Elliott wave right here. Color it into, then you have the fourth Elliott wave. This one here. And then you have now your fifth Elliott wave. You want a monthly chart, okay? So the prior reaches this level here. You say, all right, correction is about to begin. And you want to forecast, okay, the price action, all right? What we usually use, we can use the second wave of the multi-wave to forecast the corrective phase, yes or no? So we will be saying that the corrective wave that will begin here is likely to be a complex correction because the second wave is a complex correction. It was not a bad forecast because you can see that it went down, went up, went down. So we'll be expecting a correction that is like this. But because it's an Elliott wave theory that we are using, it's not an exact science, it's just an expectation. We cannot assume that definitely what has happened in the second wave is exactly what is likely to take place. It's exactly what is going to happen during the corrective phase. But there's a high chance that we may see, okay, the similar price structure during that corrective phase. All right. So here we have 1, 2, 3. Like in the second we see here, it came down. Same thing here, it came down. We are using the second wave to forecast the corrective phase. We will use the first wave, the structure of the first wave, to forecast the whole multi-wave. All right. Pay attention to what we are doing here. So second wave was 1, 2, 3. And the corrective phase was also 1, 2, 3. Our expectation is fulfilled right here. Price did similar thing, except that this low was deeper than this one here. Here we have equal low. A bit of similarity. Let's check the retracement of this move up, the B part of the zigzag pattern in correlation to this move, and compare it to what has happened here quickly. This one looks to me like almost 100%, so it's not the same. All right. So you see 1, 2, 3. So traded Elliott wave practitioner that were focusing the corrective wave All right, did make a right decision here, came down 1, 2, 3. All right. Now, polishing your area weight count consists of separating the area weight theory from the reality of the market, the expectation, and what is happening right now, looking at the price structure. All right, that's the first thing that we want to do, using the area wave as a tool. All right, but then look carefully. So we forecast that it's likely to be like this. All right, looking at the second wave, but look what's happened. Price did more than we were expecting. Now it went up, blah 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 blah. Now it was coming near this level here. So suppose you were here, you were right here where we are now. You're on a monthly chart. You see first wave, second wave, third wave, fourth wave, fifth wave. Now the price came down 1, 2, 3, and stop here. All right. Now it went up again. Look, if we draw a channel, so it went up again. One move up, continuing that messy correction. So from here, after we see 1, 2, 3, it did all the blah blah blah, but it went up to this point. Now it came down again, forming again another 1, 2, 3. You are an area weight trader. You are counting weight. You are focusing the market using the area weight theory. Now you are here. So you say George always says that the area weight count is one step at a time. Now you're on a monthly chart. You see this. So you see, all right, first wave, second wave, third wave, fourth wave, fifth wave, 1, 2, 3. Now again, 1, 2, 3, returning to the same place. You say, all right, this is a double retracement. What will be going through your mind? You'll be forecasting that we have a flat correction, a gigantic flat correction. 1, 2, 3, 1, 2, 3, a bit messy, a bit complex, all right? And now you'll be expecting 1, 2, 3, 4, 5 on the monthly charts. So using the monthly chart as an area wave trader, you are focusing the market. It's correct to say to your client, to your friend, to expect that the C part of the zigzag pattern is likely to take place here. Going back to the main topic that we are talking about today, how to polish your area wave forecast like a pro. First thing that you want to understand is that this is what you have seen on the monthly chart, and your forecast is first your forecast. So one way to improve, to start polishing your area wave forecast is to accept it as your own forecast. Other traders may not see it that way, but it is your area wave forecast. If you do not accept it as your own area wave forecast, you may start imposing it to other traders, thinking that everybody else is seeing it exactly as you see it, and this is exactly what is going to happen. 1, 2, 3, 4, 5, and if you have that mindset, the price may go and do something else, and you'll be wondering, how come other traders are so stupid and they are not seeing what you're already seeing? So one way to quickly improve your area wave forecast is always take it as your own forecast. And now the next step, as I told you at the beginning of this tutorial, is to see it from the angle of other traders. All right? See it from the angle of other traders, and don't assume, okay, that everybody else is seeing exactly the way you see it. But another way to improve your area wave forecast is to use a different time frame. I'll talk about it when I was recording part 2 about how to become an intelligent area wave trader, part 2, how to become an intelligent area wave trader, part 2. That video, I have not yet posted it. I'll be posting it somewhere today or tomorrow. So on the 22nd of July 2017. So probably by the time you are watching this video, I will already post it there. It will be on our YouTube channel. All right. So what I was saying to trader in part 2 is that one should always use the higher degree wave count. So what I was showing you here on the monthly chart, you were here, you see it 1, 2, 3, 4, 5. You see a flat correction. If that's all you can see on your chart, if your broker provide you with that data only, that's all you can say. You Anybody cannot fool you. You see, that's exactly what I've seen. But suppose you have more data, or you push your curiosity a little bit higher, talking about a higher degree wave count. You remember that George said that for an intelligent area wave trader, we must use the higher degree wave count. So you push your curiosity to the higher time. So one way to improve your area wave forecast is also to use the higher degree wave count. So now that we are on a yearly chart, we see that this tiny move up is the first wave of a higher degree. Feel free to disagree. And this move down is the second wave of a higher degree. And all this blah 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 that we were talking about on the monthly chart, 1, 2, 3, 4, 5, all the way up here, that's the third wave of a higher degree. Now what's happening here is that a flat correction forming the fourth wave of a higher degree. So where is the fifth wave? So if you assume that now you see, if you call this as a flat correction, 1, 2, 3, 4, 5, you will be thinking that, okay, if a flat correction is completed here, as you forecasting it on your monthly chart, remember, you will be expecting the fifth wave to start somewhere here. So that is your wave count, that is your area wave forecast, which is a kind of continuation of what you were doing on the monthly chart. So you say, all right, higher degree wave count, 1, 2, 3. So now I see a flat correction. I'm expecting a fifth, the C part of that flat correction, 1, 2, 3, 4, 5. But again, your expectation of the C part of the flat correction, because it's not yet formed, is just a forecast. And that forecast is your forecast. All right? Until that 1, 2, 3, 4, 5 is in place, it's just a forecast, it's just an expectation. All right? So now the question is, suppose the price did not print that 1, 2, 3, 4, 5. So now what we are doing, instead of just taking it that what we have seen is exactly what everybody else has seen, what we are expecting is exactly what is going to happen. We can play a little bit of mind game, try to play it from different angles. So the question is, what will happen if the price did not print this 1, 2, 3, 4, 5? What will happen if our area wave forecast is not correct? What will happen if the price continue to go up? So by asking those questions, that will help us to improve our area wave forecast. So the bottom line of this tutorial is that never take your area wave forecast as the only forecast in the market. Never assume that your area wave forecast is exactly what the market will print out. So now that we ask that important question, that what will happen if the price did not form the 1, 2, 3, 4, 5 down, what should happen? So first wave, second wave. All right. So now that we are calling this the second wave of a higher degree, we can use that second wave of a higher degree to forecast the real corrective first. Because what we were doing on the monthly chart, using the second wave on the monthly chart, which was a zigzag, is to forecast the correction of that monthly chart. The forecast on one time frame is just a forecast for that time frame. Now, the best forecast is to combine the forecast of different time frames. Combine the lower degree forecast with the higher degree forecast, seeing the lower degree picture and seeing the bigger picture, and know exactly what is taking place. It's like somebody trading on the 5-minute time frame, see a double top, see that the market is going to crash today. Ridiculous. All right? Okay? So, now that we ask that important question, first wave, second wave, third wave of a higher degree, 1, 2, 3 down here, that's the fourth wave of a higher degree. You can feel free to disagree with my wave count. All right, so personally, this is what I'm talking about, that my wave count is my wave count, my wave forecast is my wave forecast. I will not impose it to other traders. A trader should take it that way. So now, first wave, second wave, third wave, fourth wave. What a deep fourth wave. That's the question. What's the deep fourth wave? All right? So, it looks to me, if we do not have this move down, Another possibility that the price may go up 1, 2. So I'll be saying it's a bit messy here. You may say price form. I'm a bit reluctant to call this one here. I want to start here. Okay, 1, 2, 3. So we are now, personally, if we break above, if we continue to go up above that pink line there, we will say 1, 2, 3, 4. Hold on, please. 4, 5. What's the level of a 138% Fibonacci extension level? 138% Fibonacci extension level of this move up of the third wave here. Now, so what I'm talking about here is that the price, you can see, if you can see, from it's kind of an inverted head and shoulder chart pattern here. See this zone here, the 3 point here, left hand side shoulder, right hand side shoulder, head here on the monthly chart. That's why I'm a bit reluctant to move or to count the fifth wave from here. I'm a bit reluctant. Otherwise, it looks like 1, 2, 3 for the fifth wave. That's why I want to put it here. That's why. You understand? Looking at the price structure, I could put it here, but I don't want to. I want to put it here. So now, all right. So what I'm saying here is that we have the first minor wave or the fifth wave, the second minor wave or the fifth wave. This is the third minor wave or the fifth wave. We will expect the fourth minor wave or the fifth wave, followed by the fifth minor wave of the fifth wave, bringing the price in a zone of 138.2% Fibonacci extension level of that third wave of a higher degree. This is my expectation. This is my Elliott wave forecast. As I'm expecting that move up, I'm also aware that other traders that are looking at the chart thinking that a flat correction is in place here, those traders will expect 1, 2, 3, 4, 5 move down here. If they are referring to the higher degree wave count, their wave count will be like this: first wave, second wave, third wave, and the fourth wave will be a gigantic flat correction. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, before we have the real fifth wave. I doubt that. I doubt that. Right? That doesn't mean because I doubt it, the price cannot do it. My own Elliott wave forecast is that the price, as you see here, 1, 2, 3, this is the fourth wave, followed by the fifth wave that is being extended. Why I'm reluctant to expect a flat correction here, which is normal when we stop on the monthly chart. It's normal to expect the flat correction. You can't ignore it. We acknowledge that. That's why people start selling. We want to form the ABC, the 5 wave down. It can happen. It can happen. But the reason why I prefer my other wave count up is because of the Elliott wave theory. The Elliott wave theory stated that if the fourth wave is prolonged, talking about the time it took for the fourth wave to be extended, here it is. It started 2005, you see, 2005, 2006, 2007, all right, 2008, many years for the fourth wave to be completed, all right. There's a high chance that the fifth wave will be extended. That's why I'm reluctant to expect my fifth, the C part of the flat correction here. So now I'm using the Elliott wave theory, my knowledge of the Elliott wave theory, to help my Elliott wave forecast, to polish my Elliott wave forecast. I said, look, the fourth wave took so long to be formed. According to the Elliott wave principle, one should expect the extension of the fifth wave. That's the theory. The price does not have to do to the Elliott wave theory. It's not an exact science. The fifth wave may not be extended. We may have the C part of the expected flat correction, as we told you already. But now that I'm using the Elliott wave principle, saying that if the fourth wave is prolonged, talking about the time it took, we are likely to see an extended fifth wave. Now, my attention also dropping down to the volume bar, the surge in trading volume. You can see that at the point where, okay, at the point where the first zigzag is completed, 1, 2, 3 move, we see a surge in trading volume. People start buying in a zone of $13. See this zone? Each time the price came into this zone, there were buyers there. Yeah, there were buyers here. Now those were sellers here. Those are buyers. Okay. In this zone, these are buyers. There were also some buyers in this zone. And these definitely those were buyers. Okay. 532 million shares being transacted. Those were sellers here. How do we know? Because of the price action. 1, 2, 3 came down. They sold it. Those were buyers. Those people here, they were buyers. Surging, they were buyers. How do we know? The price break resistance continued to go up. Now those people, you see here, those are surging trading volume. Now we know that they are out here. Some of them came out. Here, you see. Price crashed down. 1, 2, 3 down. Take a profit. They are out. Now newcomers, bullish traders, bullish traders. Those are bullish traders. Look, after that, the price did not form a new lower low. Stock is forming equal low, and now it start going up. Those are buyers, those are buyers. And again now, again here, we have more buyers, same zone, $13 zone. They are buying there all the time. There were few buyers here. Again in the zone. Every time price come near $13, people are buying. Again here, the last one, can you see those people? Those are buyers. Buying in a zone of 30, now not 13, these people bought at $17. So most people were buying at $13. At the end of that first correction, 1, 2, 3 down, buyers, 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 and now they start buying not at $13, they are buying at $17. How do we know they are buying? The price start breaking resistance. That's how we know they are buyers. If they were selling, probably forming lower low, lower high. And those buyers are still in place. They did not come out now. These people did not come out yet. So for that 1, 2, 3, 4, 5 move to come down, to polish our area wave count, we must also combine the area wave forecast with the volume bar, with the trading volume, with other technical tools. So referring traders to the video that are titled How to Become an Intelligent Area Wave Trader, Part 1, Part 2, Part 3, I was telling trader that one should not confine oneself in the circle of the area wave theory. One should not confine oneself in a zone of the area wave principle. One should always combine the area wave theory with the volume bar, with Fibonacci, with the predictive fractal to make a better decision. So now that I'm combining the area wave theory that stated that if the fourth area wave is prolonged, talking about the time it took, we are likely to see the fifth wave extension. If the fifth wave will be extended, we must have more buyers coming in at the end of the fourth wave. And this is the case here. That's why I'm more reluctant to discount the C part of the flat correction in this case, and I'm more willing to expect the continuation of the fifth wave, which will be extended, forming 1, 2, 3, 4, 5 waves. Again, for new traders, one will say, all right, George, you are the man, you forecast that definitely you're going to go up, I will buy. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell a Symantec corporation. All right? So this is the end of this tutorial, talking about how to polish your area wave forecast like a pro. Your area wave forecast is your forecast. One should take it that way, that it is my forecast. It does not have to be equal to the forecast of somebody else. Understand that your wave forecast may be completely different from what other traders are looking at. Therefore, you must also try to understand how other traders may forecast the market. The second thing to polish your area wave forecast is to use the higher degree a wave count. So you forecasting the wave count on the monthly chart, on the daily chart, on the hourly time frame. Understand that that forecast is only for that time frame. One must now use different time frame, higher degree wave count to see the bigger picture, to make sense, to combine the higher degree wave forecast with the lower degree wave count. If you see a conflict between the lower degree wave forecast and the higher degree wave forecast, you know that you are wrong completely on the lower degree straight away, because the higher degree wave forecast will make more sense, will take over. But in all cases, understand that the forecast is just an expectation. The price does not have to fulfill the expectation. It's not because the area weight theory says that if the fourth wave is prolonged in time, definitely the fifth wave will be extended. If the fourth wave is prolonged as it was here, and that there were no buyers, the fifth wave will not be extended. Full stop. So we will use the area wave as a guide all the time that we are forecasting the financial market. Another thing that I can say to traders to focus, to polish their area wave forecast, all right, is that when you forecast the market, all right, and the market prints something out, you have to review your previous forecast. Don't be too selfish or too proud to acknowledge that error has been made or mistake has been made, or you have left a stone unturned and you have not taken into consideration other price structure. All right, just be humble and say that that was not the correct forecast. The forecast is dynamic. The next step is to look at, now that we have more information, we can now ascertain that it was not a flat correction. It was in fact a zigzag, that the fifth wave is now underway. But nothing will replace practice. With more practice, focus in the market. Sometimes you get it right, sometimes you get it wrong. Don't be discouraged. With more practice, you will definitely polish your area wave forecast. But the first step is to master first the theory. That's the basic, but to focus the market. All right. So here we can say, you can see that. Here we can say it's a strange scenario here, because what we were calling our second wave of a higher degree has been prolonged also over time, you see here. So normally when the second wave is prolonged over time, we will expect the fourth wave to be swift. Now, if you compare this second wave, this is about mastering the theory. It started in 1992 and ended in 1999. That's 7 years, okay? Now the fourth wave, according to my wave count, I need to mention that, all right, has ended here from 2005 to 2008. Yes, call it 2009, 4 years. So 7 years. So we may say this is swift, isn't it? Is it swift? 7 years in comparison to 3 or 4 years. Well, it's swift. All right. So this is more prolonged. This is a swifter. All right. Quicker. All right. Okay. But again, as we were on a monthly chart, we were using the monthly chart second wave to focus the corrective wave, as you see here. But it's all, if we stop only on the monthly chart, that's no good. You have to use a different time frame. Now, again, on the yearly chart, we are expecting the fifth wave extension, because we are thinking that, okay, the fourth wave has been prolonged. Now, we will have the fifth wave extension. Are we going to have the fifth wave extension? We will see. So there are other key resistance levels trader must watch. $35.14. There's another one near $42. Another one near $46 zone. One step at a time. Do not be surprised if the price print 1, 2, 3, 4, 5 down. If they're going to do that, you see here, all right, they were buying, those were buyers here on the yearly chart, those were sellers here. Now we are seeing buyers, those are buyers, because this resistance is taken out. Watch out, if we're going to have 1, 2, 3, 4, 5 move down, we should have another surge in trading volume. We should see more sellers. These people here must come out. So bringing us to the point that I made earlier, in order to polish your area wave forecast, you must combine the area wave theory with other technical tools like the trading volume, the Fibonacci extension, Fibonacci retracement, and the predictive fractal. This is the end of this long tutorial talking about how to polish area wave forecast like a pro. As always, if you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another blah blah blah, let us know by giving us the thumbs down. Do not worry, let us know. All right. If you think this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how to polish Elliott wave forecast like a pro. Happy trading to you all and speak to you soon.